What does it take to be a good investor? Obviously, you need to be able to spot opportunities that most of the market doesn't see or understand yet. You need to be able to see it for what it is and what it can be. And most other people don't see that. And so what does that mean? It means you're getting things at a good price because of the disjointment of perception on that asset. Okay, that's one. The other one is, if you do have a strong thesis about what an asset's going to do in the long term, let's say go up in price, then you need a strong emotional stability so that when the price goes down, despite your belief that it's going to go up in the future, you stick to that belief and you remember why you bought it in the first place. And unfortunately, we're humans, we're animals, very emotional creatures, more than we'd like to admit. Then a lot of people are going to sell in those situations, even though they believe, let's use Bitcoin as an example, Bitcoin's going to go up over time. If there's volatility in the short term and it goes past a certain price, they get shaken out. And so you need to build a certain amount of stoicism, right? This philosophy of like emotional self-regulation, emotional stability, dealing with emotions as they come up. I think that's super important. I think the best investors in the world and in history were people who were relatively unemotional and rational, right? Stock goes down, it's okay. The fundamentals are good. I bought it because of the fundamentals. It was underpriced, or it was a contrarian bet, or, it's got a great growth rate. So the short term shouldn't matter. So I think that's my take. We are very emotional creatures. We react emotionally to the price of things that we hold. And that's why when you get into an asset, it's really important to understand what you're getting into, understand the fundamentals, understand that anything that happens in the short term is noise and it's not signal. And so I think I'll stop there for today. Have a good one, guys.